Welcome, U.S. stock investors. Look, if you want to skip reading through 2 hours of dense earnings transcripts and get straight to the actionable intelligence, you are in the exact right place. Today, we're unpacking the hidden growth engines buried deep inside Nvidia's latest Q1 earnings call. By the end of this explainer, you're going to have a clear grasp of the under-the-radar insights that Wall Street is frantically trying to price in right now. We're talking about giving you a serious edge in your stock analysis. Instead of a boring, traditional summary, we're getting straight to the alpha. Here are the 3 massive catalysts you absolutely need to know. First, the pivotal ACIE market shift. Second, the $1 trillion Rubin revenue target. And third, exactly why AI agents are unlocking a brand new $200 billion CPU market for Nvidia. All right, to set our baseline and really grasp the sheer scale of what we're looking at, let's talk top-line numbers. Nvidia just posted an absolutely staggering $81.6 billion in Q1 revenue. I mean, wow, that is up 85% year over year and 20% sequentially. Literally every major metric, revenue, operating profit, free cash flow, they all hit record highs. This phenomenal surge is being aggressively driven by the massive Blackwell system ramp-up. It basically proves that this AI infrastructure supercycle isn't just continuing, it's accelerating way faster than even the most conservative models predicted. Now, what's truly pivotal here is how Nvidia has actually restructured their financial disclosures. It's incredibly revealing for us as investors. We are now looking at effectively a 50-50 split in their data center revenue. On one hand, you've got the traditional hyperscalers at $38 billion. But on the other hand, you have this rapidly growing new segment called ACIE, pulling in $37 billion. That piece alone is up 31% just quarter over quarter. So what exactly is ACIE, and honestly, why should you care? Well, it stands for AI Cloud, Enterprise, Industrial, Sovereign AI, and AI Factories. This completely flips the traditional investment thesis on its head. Nvidia is no longer just heavily reliant on big tech hyperscalers like Amazon, Meta, or Google. ACIE adoption is just exploding globally. Just take Sovereign AI, which is basically nation-states buying compute. That alone is growing over 80% year over year. The demand is radiating outward into this massive diversified enterprise market. And the crucial point is exactly what CEO Jensen Huang highlighted on the call. He said, compute is revenue, compute is profit. This totally changes how businesses are viewing capital expenditures, right? These companies and countries, they aren't just buying chips as some traditional IT cost center. No, they are actively building profit-generating AI factories. The AI they deploy accelerates their own revenue generation far faster than traditional software ever could. Because these enterprise, industrial, and sovereign entities can't easily build custom silicon themselves. I mean, they don't have the engineering armies of a hyperscaler. They are leaning heavily on Nvidia's full-stack hardware and software solutions. And because of this massive widening of the customer base, Nvidia is now projecting long-term AI infrastructure spend to skyrocket to an unbelievable $3 to $4 trillion annually. We're talking about a complete rewiring of global industrial infrastructure. It's literally the industrial revolution of the digital age. This massive infrastructure expansion is exactly why management dropped a huge revelation on the call. They confidently maintained their target of generating a cumulative $1 trillion in revenue just from the Blackwell and Rubin architectures between the years 2025 and 2027. $1 trillion. Having that level of conviction and visibility into future pipeline demand in the tech sector, that's nearly unprecedented. If you want to stay updated on the latest U.S. stock market news, make sure to subscribe to my channel. I upload new explainers every week. Okay, so this momentum builds aggressively into next year with the Vera Rubin rollout. Nvidia's targeting a super rapid cadence here. We're looking at initial shipments in Q3, production expansion in Q4, and then a high-volume ramp-up by Q1 of 2027. This timeline is perfectly orchestrated to capture the soaring inference market share among frontier model builders. Almost all of them are ready to adopt Rubin from day one. But here is perhaps the most overlooked catalyst of the entire earnings call. And I think the broader market is honestly still digesting what this means for Nvidia's valuation. The new Vera CPU is opening up an entirely new, independent $200 billion total addressable market. Right? This isn't just about GPUs anymore. This is a massive incremental growth engine that previously just wasn't modeled by most analysts who were looking purely at accelerated computing. So what exactly is driving this sudden massive CPU demand? Well, it's all about AI agents. Think of AI agents kind of like a general contractor on a construction site. They need intense CPU power to manage the tools, coordinate the subcontractors, and oversee the logic, while the GPU acts as the heavy machinery doing all the brute force lifting. These autonomous software systems use tools, manage memory, surf the web, compile code, and deploy sub-agents to execute highly complex, multi-step tasks. It's just an incredibly synergistic ecosystem. And because of this ecosystem, the Vera CPU is incredibly disruptive to the legacy players in the market. It has amazing deployment flexibility. It can be paired tightly with Rubin as the Vera Rubin system, used entirely as a standalone CPU, or paired with networking switches like CX9 for isolated security and storage. The key takeaway here? It's not cannibalizing GPU sales. It's a completely additive revenue stream. In fact, this independent CPU segment is expected to drive an astonishing $20 billion in revenue for Nvidia this year alone. Now, while we're on the topic of specific silicon strategies, Nvidia also took a moment to clarify their approach to custom token chips. So we have the LPX chips, which are specifically targeted at rapid, niche, low-latency, highly interactive services with extremely high token generation rates. Contrast that with Grace Blackwell, which is their flagship design meant to handle the entire AI lifecycle. Everything from pre-training to post-training, reinforcement learning, and massive scale inference. So LPX is a great, fast supplement for specific tasks, but Grace Blackwell absolutely remains the core versatile engine for the industry. Shifting over to profitability now because, as investors, top-line growth without bottom-line profit doesn't really pay the bills, right? Despite the incredibly complex supply chain requirements and the heavy costs of the Blackwell ramp-up, Nvidia projects their Q2 non-GAAP gross margins to hold incredibly strong at 75%. They are effectively leveraging their immense scale, software ecosystem, and product mix to maintain elite-tier profitability, even as they transition to entirely new, much more complex hardware architectures. However, as objective analysts, we've got to impartially look at the macro risks at play here too. The China market remains a highly complex factor. While the U.S. government has officially approved H200 shipments to China, Nvidia confirmed on the call that absolutely zero revenue has materialized from this yet. Because of the ongoing import uncertainties and the broader regulatory environment, management actually conservatively excluded all China data center compute revenue from their Q2 guidance. To wrap up this explainer, I really want to hear your analytical take in the comments below. Based on the data we just walked through, I have two questions for you. First, do you think the new Vera CPU can truly dominate the burgeoning AI agent ecosystem the same way NVIDIA's GPUs have dominated model training? And second, which U.S. stock or company earnings report should we analyze in our next explainer? Let me know your thoughts down below. Thank you for learning with me today, and keep your focus sharp out there in the markets.